All right, everyone. So in today's episode, we're going to do a game plan for the week ahead. And I always like to start by providing some context. So we're going to look back at the previous week and I'm going to go over my metrics, what was working, what was not working, because this sort of sets the stage for, kind of what I think I can expect on Monday. Now, it's worth saying that this past week was generally pretty slow with the exception of GameStop. So if you were trading GameStop, there was a lot of volatility, but the rest of the market for small cap stocks was pretty slow. And I think the reason was because volume was sort of dispersed among a lot of different stocks, GameStop, AMC, a couple of large caps. And when that happens, each individual small cap that maybe starts to get a little attention just doesn't usually get follow through. Usually it's when nothing else is interesting. You have a small cap that pops up that all of a sudden it gets a ton of attention. And what's funny about this is that you could literally, I would say, I mean, it'd be hard to really test this, but I speculate that you could have literally the same stock put out the same exact headline, and on a day when you've got 5 or 6 other stocks that are maybe gapping up higher, or you have a GameStop, that stock won't perform well. But that same exact news on that same exact stock on a day that nothing else looks good, that stock could go up 40, 50, 100% or more. And so that can be very frustrating because you're like, wait, I don't get it. It's the same headline. It's the same, the characteristics of the stock are the same. But what's different is sort of the context of the overall market and what's currently in play. And so you kind of have to be able to have some sense of trader psychology. What are other people looking at? And that's, of course, one of the nice reasons to not trade all by yourself. Because when you trade all by yourself, you can lose that connection with what other people like. So at Warrior Trading, in the community, in the chat room, I can see what other people are typing, what they're interested in, what they like. So if everyone's talking about a cheap penny stock, I may not like it for myself, but I can't ignore the fact that that's clearly what people think is obvious. If it's GameStop, it's very clear that it's GameStop. So by the way, link in the description and in the top of the comments for a 2-week trial at Warrior Trading, and you can join me and trade side by side with me for the next 2 weeks if you'd like. Okay, so KAVL was our wild card stock on Friday. Basically, this is a perfect example of we didn't have anything that looked good, and then KAVL came out of nowhere. So I'm going to put up my top gappers scan. So these are all the different scans that are part of the Day Trade Dash platform. And we have new scans that we're building. The latest one that we just released is the running up scanner down here. But I'll show you the top gappers scanner. So this scan is a screenshot essentially of what the market looked like at the 9:25 to 9:30 5-minute period that ended at 9:30. This gap scan is now offline and stops updating until Monday morning. So this is nice to me because this is a picture of time. Everything freezes. The volume freezes, the relative volume freezes, everything on this scanner stops updating at 9:30. And this is super helpful for me as an educator to be able to show you guys this is what this stock looked like at this time of the day. So what's interesting here is at this time of the day, this was Friday morning at 9:30, KAVL was gapping up 200%. Our second leading gapper was 77%, but it was 27 cents. Our third was 38 cents. Our fourth was a penny. The fifth, again, 17 cents, super cheap. AIMD, $1.10. So although there were some stocks in here that did have some volume and some people were paying attention to them, this was far and away our most obvious stock. At the time, the relative volume was 463. That's the ratio of how much higher above average it was based on that time of day and that amount of volume with 4 million shares. So that was KAVL. It came really out of left field. Didn't see that coming at all. And I'll tell you, I saw a lot of people kind of kicking themselves because they weren't as aggressive as they could have, would have, should have been. But here's the thing. We've been in a market where this last week generally was a little colder. Let's see. Let me pull up my TraderView stats for you. So I'm going to grab my stats right up here. There they are. Okay, so these are the last few trading days for me here, as you can see. So Friday, Thursday, Wednesday, Tuesday, and I had no trades on Monday. Monday was the very rare no trade day for me. It is rare because, I mean, it just doesn't happen often that I sit down and I don't see anything. But this was the Tuesday after the Memorial Day weekend. I didn't see anything on that day. That was a no trade day. Monday the 10th, there's a no trade day. April 19th, I can't remember if that's a no trade day. There's, sometimes I'll have something like whatever. One of my kids is sick, or I'll have I don't know, travel or something that causes me to miss the day. But anyways, doesn't really matter. So nonetheless, no trade days are pretty rare for me. But if we look here at this week, Monday, no trade day. Tuesday, blah, nothing. $887, nothing. Second day, $1,600 on Wednesday, $1,400 in the red on Thursday, and then all of a sudden $6,800 here on Friday. So a couple good Fridays in a row. Best day of the month so far was Monday right here. This was on GameStop. But for what it's worth, part of this was because what was this? Yeah, no, that was on GameStop. Anyways, no, that was just a solid trade. But so all of this was to say that this week has been kind of slow, and I had a red day on Thursday. So when I was sitting down Friday morning, I was like, I don't know, guys, I'm just not sure that anything is, I'm going to be a little extra cautious. And on my first trades on Friday, I actually green for a moment and then went red. So it was like, all right, I'm already red on the day. Granted, it was only by 400, but still. And then all of a sudden, out of nowhere, boom, that nice big trade, added a little more, and then, cooled off. So my whole thing with this was that, it's amazing when a stock goes from $1 to $7, basically straight with no pullback. That's what this did. It was, that was awesome. But usually we just don't expect that, especially when the market's cold. And so I think what probably happened here, this still kind of confuses me because there was no clear catalyst, but for some reason, all of a sudden right here at about 9:15, it starts taking off, goes to $1, $1.50, pulls back, $1.70, pulls back, punches up through $2.50, pulls back up to $3.50, pulls back up to $4, pulls back up to $4.50. And that was the high of day right there. Now, I'm guessing that there were maybe some people who just tried to short it right away. I actually noticed it was really cheap to borrow shares. They were not expensive at all. So being cheap to borrow, that can make it more likely that people hit it to the short side. Going into the open, we get this jackknife move right here, but it ends up, although it comes back down, it held the low, and then it rallies all the way back up here to 7, pulls back up to 750, up to 8. And then we go a little further into the day, below volume weighted average price, back above it, back below it, above it, below it. And then look at this, going into the close, all of a sudden we rally back up, back to 8, all the way here to a high of 850. So if you look at this chart on the 5-minute, I think we can definitely say, double top. These topping tails, but buyers pushed it up, and maybe it was shorts covering going into the close, like, this is one that could really go crazy. So one of the things that this stock had going for it, sub 1 million share float, it's a super low float. And, the daily chart on this, it wasn't bad. You've got a daily chart that it's a stock that's been beaten up for a long time. So, it kind of starts to curl there. Did have this level back in this area up around 10. So it showed it's made big moves before, which is good. High volume candles. It did give back most of those gains, eventually all of them, but then, back at it here. One thing that'll be interesting on this is whether or not they tap the shelf registration, because I was looking at the filings and we saw that on the 13th, so just for Thursday, they have this S1 registration to sell securities, up to 4.5 million common warrants to purchase up to 4.5 million shares, and up to 3 million units consisting of 3 million common shares. So, this is an offering, which is interesting. It's priced. It's actually not priced. It was at an assumed price, but it's not yet been executed. So anyways, I find that interesting, but I don't know. We'll see what happens with the stock. So it just was sort of the perfect storm for this stock on Friday. I think this is a great example of this stock on another day might not have gone anywhere, but just for the lack of anything else, it ended up making a big move. Yeah. Nice. So anyway, so that was KAVL on Friday. Really nice move. And we didn't really have anything else as far as I could tell that kind of came into focus. We did have Adobe, large cap stock, obviously, had earnings. It was really nice. Thank you. I'll keep this here on my desk for right now. So, nice move there. Obviously, NVIDIA last week, stock split, now up at $130, which would be the $1,300 if you took away the split, which you could see right here. So a lot of volume coming in. This is really just on a tear, which is great. So my thoughts for the week ahead. If we pull up the continuation scanner, we can sort this by biggest move in the last 2 weeks. And, we'll see BNED, Barnes & Noble Education. I kind of thought this one maybe would bounce more than it did because it had such a big sell-off, reverse split, that maybe we would see a nice bounce, but that didn't give it to us. So that one's kind of out of play. ASNS is a little too cheap. MLGO, this one had a nice move, but already had the first candle to make a new high. So nothing on that. TNXP, pulling back too much. It's got a lot of curl potential, but I don't think it's going to happen. ZAPP, this one, still in play. When it first had this move here, the halt bands were every 15 cents. So let's see. If you are familiar with circuit breaker halts, you'll understand this. But because it had closed the previous day below 75 cents, you can have it. Just be very careful. Just be very careful. Because it closed below 75 cents, the halt bands were every 15 cents. So, it was literally halting up 15 cents, halting down 15 cents, which is just basically, to me, untradeable. But now, these last couple of days, of course, it's closed above 75 cents. So the halt bands are larger. It is on, this sort of extended 5-minute chart. It's kind of an extended bull flag in a sense here. You've got this pullback from sort of up in this area here, approximately. Oops, I'll put that up there. So, a little bit of resistance there, maybe a little bit of support in here. So it's kind of a longer pattern, but, entries off support could work. The only thing is I wouldn't just buy this based just on the pattern, because the problem with that is it's now been several days and this could just kind of slowly fade. What I would need to see is a reason for it to start to curl back up. And that's going to ultimately mean volume needs to come into it. Maybe news comes out. And if it doesn't, it would be just a technical breakout. And I don't think the daily chart's quite ready for that. We had basically 2 big green candles. So when MLGO gave us that first candle to make a new high, it had the big candle and then 1, 2, 3 candles of pullback. Now, I still didn't like this pattern because it retraced almost all of the move back down here, right? At least ZAPP is holding, the top 75% of its move. That to me is more bullish, but it needs a couple more days to consolidate before it might be worthy of considering for a trade up towards 4. So that one is a continuation stock to keep on watch. The rest of these, more or less, I've looked at. BNED, let me just pull that one back up. Yeah, no, right. So that one's no good. BMEA, yeah, a little gap fill here on this on the daily chart coming back up. But KAVL, I don't think we'll get another trade on this on Monday. I could be wrong, but it just, you've got that topping tail on the daily. On the intraday chart, we know that it, sort of has these topping tails up here. But this is sort of support down in this area. So depending on how it looks Monday, if it can still hold that level, maybe there could be an entry off support for a curl back up. But it's really not my favorite pattern. I'd rather trade something that's really on the front side of a move. LGVN, this one, as I said on Friday, is infuriating. It's so choppy. So I don't know if it's an algorithm or what it is, but they're just trying to bait traders into getting in. So no interest in that one for me. Looking at the overall market, S&P 500, you can't say anything bad, really. The market's in good shape. We did hear from the Federal Reserve that they're now pricing in or factoring one interest rate cut this year. It's not a very big one, but the market, is handling that fine. I mean, I would love to see them cut interest rates just because, I think we'll see it stimulate the economy with people being able to borrow money for less. And certainly a lot of small cap companies need to borrow money. So being able to, finance running their business at a lower interest rate, I think will be good. But I understand they don't want to pull back too quickly and have inflation go back up. So the IWM, the Russell index for small caps, showing a bit more weakness. Not terribly weak, but you could see it's a bit weak, and especially when you pull back and look at the last couple of years and realize that we're not at all-time highs in small cap market. The small cap market's not all-time highs. The large cap market is at all-time highs, and that's what's pulling the S&P 500, of course, up. But it's not small caps. Small caps take a little time. They're more sensitive, obviously, to interest rates, and they're not as well established as large cap companies. So small caps are going to lag behind, but it doesn't mean there's not individual opportunities. And so you could say, well, Ross, what about trading some of these large caps, NVIDIA, things like that? And one of the things that I'll kind of return back to is that this is a playground that I sort of think about that's dominated by some of the most elite hedge funds, proprietary trading firms, firms that are utilizing high frequency trading algorithms. And the reason is, if you can develop an algorithm to trade Tesla and NVIDIA every day, you can print millions and millions of dollars. So there's a tremendous amount of competition there to try to trade these stocks, to try to fake people out. So like the games played on these stocks are next level, really, really hard. And let's get real, we're retail traders. Like, we're never going to have the edge that the deep pockets have. Hold on one second. So, I try to kind of stay in my lane. The reality is, most of the KAVL type of stocks, the hedge funds, this is like off their radar. They could care less about these companies. They're too small. They can't buy enough shares to make serious money. They're not going to spend millions and millions of dollars developing algorithms to trade, the little peanuts here at the bottom of the market. They're going to spend the money on how to be a master of trading Apple and Tesla and NVIDIA, the S&P 500. That's the area, and so that's the reason that those become as choppy as they become. Now, it's true that when you have a catalyst like we had with earnings and then the split, that's a time where I should have pulled the trigger here. And I said, I'm being an armchair quarterback, but I said at that time, well, Tesla during 2020, 2021, when they announced the split, the stock went just straight up. So I don't know. I think maybe I should go ahead, and now that they've announced the split, which was right here on Tesla, I should just get in and ride this momentum. But I was like, well, NVIDIA did a split not that long ago. And actually, when they did that split, the price dropped before the split. So, NVIDIA's history with splits is a little different. And I talked myself out of it. Anyways, it's outside my go-to, but generally speaking, it's true that small caps are slow. There are individual days where large caps could be considered when there's a catalyst. But even if we look at the price action yesterday on Adobe, it's kind of remarkable because it basically skyrockets up and then more or less is range bound. Like, how does that happen? It goes up that much and then just trades sideways. And it did it even on high relative volume. You look at the volume on this, and it's high these last 2 days because of the after hours volume that sparked it here. But you've got high relative volume, and it still trades in a tiny little range. So I would say, once again, the market makers and algorithms are they're in control on these. So I think it's important to know your lane, and I'm hesitant to venture too far outside of it. It affects my performance if I venture outside my comfort zone and I am unsuccessful with that. My performance is important. I care, quite a bit about my metrics, and my analytics. I obviously post my broker statements on the website at the end of every month. And, so I'm putting them out there, and I want to make sure that I'm keeping up my numbers. And so I'm hesitant to venture outside my wheelhouse, end up, getting smoked. I did that a little. Actually, I traded options and large caps quite a bit during the pandemic. But during that time, I had such a huge cushion from day trading profits that I was comfortable with it. But I'll say that I had some days where I would, lose $15,000-$20,000 trading Netflix. And it was like, man, that was kind of dumb. So Netflix was a tough one for me. But anyway, so my focus right now is just trying to keep my head down, stay focused, do what I know I'm good at. And I'm a little closed-minded to going too far outside of that, but part of that's because I've been, kind of, the market's punished me for trying before, and so it's made me hesitant to try again. Anyway, so my expectation for this coming week is that although we had a really good move on Friday with KAVL, I don't know on Monday if we're going to have that psychological FOMO continuation from a Friday move. Friday into Monday is it's like if a stock gaps up after hours on Friday, by Monday morning, a lot of people have forgotten about it. So, each week we kind of reset on Monday morning, and we'll see what the scanners look like. Obviously, people are still really dialed in, on these cheap stocks, the penny stocks. So those are getting a lot of attention. But I'll just be, as always, looking at the gap scanner, looking to see where we have momentum. And if things are giving me a reason to scale up and, lean in, I will. But I also need to be careful to slow down and just remember that even though it doesn't feel necessarily super productive to just be hitting small base hit days, when you're going for consistency, these days, they add up. So, we go back to the last 90 days, and it's like, you could see, obviously, there's some pretty good consistency here. Couple bigger green days, which is always great. Red days, they're going to happen. One bigger one. This was my biggest red day in like 18 months, so that was a real drag. And it's 2 red days in a row. But, recovered all of that. Account is sitting right here. If I scrolled back to all-time history of my account, it's right here. This still 90 days doesn't look any different. So my account basically is sitting at all-time highs here. The only problem with clearing it, this shows the cumulative profit in 90 days. There's not a good graph for showing like all-time profit, or the sort of equity curve for all time, but anyways, it's fine. So yeah, this is kind of where we're at here at the moment. It is, summer, so more wild card days, and probably higher expectation that things generally will be slow. So just base hit. And then when we hit a wild card, I'll be grateful for that. I'll try to be as aggressive as I can on those days and remind myself that those profits will have to tide me over during, some of the inevitable slow days. But this is what I'm really about. It's just being, more or less consistent, trying to keep those averages high enough, keep the red days averaged low enough and few and far between. And as long as I can do that, I can continue to have a good year and a good summer. So 1/1/2024. So year to date right now, 303,000 gross net of fees and commissions for 254 here. So fees and commissions right now, 15% of my total profit. Commissions are, not as substantial. It's the ECN fees that are higher. And all of this could go away if I just, bite the bullet and go trade with Thinkorswim. But Thinkorswim has been struggling a little bit with this Charles Schwab transition. So now doesn't feel like the time to try trading over there again. But I'm considering it because I'm spending a lot of money in fees and commissions. And one of the things that I'll talk about maybe in an upcoming episode is that the market is deeply segregated right now. And what I mean by that is when you trade at Thinkorswim or at Robinhood, let's say you want to sell shares and I want to buy shares. Most likely, I wouldn't even be able to buy your shares. And the reason is because your trades will execute inside essentially the dark pool that is created by the payment for order flow firms. And when I'm trading on the open market, because I'm not using a payment for order flow commission-free broker, my brokers just go to the regular market. So the market is now separated into all of these little pools where actually I would wager at this point that more volume is taking place off the main exchange than on it. And so I've anecdotally been speaking with traders, or have heard from traders, that they're executing orders for 30 or 40,000 shares with almost no slippage with some of these commission-free brokers. And I'm thinking, if I tried to do that with my broker, I don't even want to think about how much slippage I would get. And so it creates a bit of unfairness in the market, because if I wanted to buy 40,000 shares and a stock is trading at, let's say, let's just say a stock's trading at 350 on the offer. So that's the ask, that's the bid. Let's say I want to buy 40,000 shares. I might end up filling it, 375, right? 25 cents of slippage on 4,000 shares, talking about $10,000 of slippage. Whereas if you want to buy 40,000 shares and you're inside a dark pool and that payment for order flow wholesaler has 40,000 shares of inventory, they'll just give it to you just like that, no slippage. Or let's say, for instance, that I want to sell 40,000 shares. And let's say that you want to buy 40,000 shares, but you're over on in the dark pool. These two orders don't connect. So you're not able to get my liquidity. I'm not able to get yours. We are just almost trading in separate markets. I mean, they're all based on the pricing of the lit market right here. But this is the thing I was talking about in the episode on naked short selling, because what I said was that these firms that are doing these really big equity swaps are almost doing like a side bet on the price of the stock. And in some cases, the side bets are so big that they could use relatively smaller amounts of money to move the stock on the lit market so it benefits their side market bet, which is like, it's really crazy. But it's just because of the way the lit market has become, has had less and less volume. And so the fact is, more of this volume is going into these alternative trading systems and the dark pools that are the payment for order flow brokers. So payment for order flow brokers are over here, and they're representing a huge amount of volume. So all of them, Thinkorswim, E-Trade, Robinhood, Webull, Fidelity, Interactive Brokers, whatever. I mean, all of these brokers that do payment for order flow, while it's true that the orders can get routed out to the market, and they will from time to time, the preference for the firm is to route internally and to match orders internally. And so when that's happening, you end up being, you're not, and the thing is, like, between different firms, you're not even connected. And so that was the whole argument that the regulators were making for switching to an auction. They're like, everyone should go into the same auction. If everyone goes in the same auction, it's better, because then you can all access each other's liquidity. And the payment for order flow firms are like, no, we don't like that at all. I don't think they would make as much money on it. So anyways, if you can't beat them, join them. So maybe the entire market is just going to switch to these payment for order flow firms. So we so we don't have to trade on the lit market that's becoming thinner and thinner and thinner. Anyways, just food for thought. But hey, listen, I hope you guys have a great rest of the weekend, and I'll see you back at it here bright and early Monday morning. I'll be live streaming for Warrior Pro members, so there's a link for a 2-week trial. Link is down in the description and in the top of the comments. So thank you guys as always for tuning in, and I'll see you back here bright and early tomorrow.